Welcome to Herd Mentality, a podcast from StoneX where we discuss global dairy markets and what's driving them. Remember that the trading of derivatives such as futures, options, and over-the-counter products or swaps may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and past results are not necessarily indicative of future results. We're recording this on April 11th, Friday afternoon after the markets closed. With me this week is Dave Kurzawski, team lead in the Chicago office. And it's been a hectic and volatile 2 weeks with the outside markets, the equity markets dropping quite a bit, rallying, dropping again, and a lot of new headlines. Obviously, a lot of stuff around tariffs have been going on, and we'll touch on that a little bit. But one of the questions that I wanted to ask Dave is, if it wasn't for the tariffs, what would we be talking about? What else is happening in dairy supply and demand and these markets here in the U.S.? But kind of to kick things off, I've tried to do a lot of work around these tariffs and the different ways that they might impact dairy prices. And right now, my current estimate, if the tariffs go into place and there's significant retaliation and it impacts global economic growth and it reduces U.S. GDP, and the administration puts additional tariffs on, puts additional fees on Chinese-made or Chinese-owned ships coming into U.S. ports, it would knock something in the range of 14 to 34% off of U.S. dairy prices. Now, since Inauguration Day, since January 20th, the second quarter CME futures for cheese have dropped 4.5%, butters dropped 12%, non-fats dropped 12%, and dry wheys dropped about 32%. So the butter and non-fat might be pricing in a decent amount of the tariffs. Dry wheys taking a bigger hit than you would expect just based on averages, but I think it makes sense given that we're still in a significant dispute with China, who's buying a big chunk of our whey. But, so I guess just to wrap up the tariff discussion, sorry, Dave, leaving you out of it, but the markets have dropped quite a bit already. There's still a little bit more downside in here if some of the negative ramifications start to hit the market. But tariffs are not the only thing happening. What do you make out of these drops in prices, Dave?
Yeah, well, I want to say thank you from the bottom of my heart for leaving me out of the tariff discussion. it's, it's a relief. I can breathe a sigh of relief over here. No, I mean, I think obviously the geopolitical chaos currently is factoring in. And I think from Inauguration Day, to some degree, I mean, there are, obviously the impacts on trade flows start April 2nd, essentially, or possibly, or there, April 9th, whatever the dates that President Trump and the administration laid out. But their perception is reality, and these we're not all AI. So human beings are at the helm of these markets, and I think people knew generally the direction that President Trump was going to take the administration and take his view on we'll call it policy reform, trade policy reform. And I think because of that, the market's probably, some of that sentiment absolutely was baked into the market well before, April 2nd, Liberation Day. So to your point, I think that's part of it. But I also think, if you look at the data here domestically, demand hasn't been great. Our exports for, let's say, non-fat have been spotty at best. Domestic demand here in the U.S. for cheese has been off. I think you said down 1.5% there in February. Cheese disappearance was down 1.5%. So you've got, questionable consumer resilience as we've headed into the new year. Probably the outcome of having higher prices across the board, for the past several years, but in particular 2024. So I think, all of that. So we're making more milk and we've got weaker domestic demand generally. And I think that's kind of played through along with this kind of negative sentiment around actually what's happening right now on global trade.
the last 2 months, the January and February milk production data for the U.S. has come in higher than expected, with the headline number in February up about 1% from a year ago after adjusting for leap year. And with California still continuing to improve a bit, the expected number for March, looking at StoneX Plus here, is 1.3% growth. Have you heard anything recently about how milk production is shaping up? I mean, we should be approaching the flush here pretty soon.
Yeah, I mean, I think milk flows right now are pretty good across the country. Bird flu has been kept at bay. I do think there's going to be some issues. We had obviously California got banged up starting basically in September, October of last year on bird flu. There's probably going to be some issues that we have to work through with regard to, um, pregnancies and freshening cows in a massive milk producing state like California. Sometime as we head into the summer months, which will probably also tighten up milk in other parts of the country as well. But for right now, there seems to be plenty of milk available. What's interesting about that is that if I look back at the spot markets here in the U.S., um, for right now they've bottomed in March. So despite the fact that we're in the flush time period, we should have plenty of milk, which I think we do. Of course, we've got all this geopolitical risk that would, tend to be bearish if for no other reason than people stand on the sidelines and say, "Let's wait and see how this shakes out." So all of those things at play, a lot of evident kind of negative, you know, uh, factors for the market to absorb, and the market's absorbed it pretty well. I think if you look back, the butter market put its at least current bottom, $2.25 a pound. That was back on March 4th. Maybe not ironically, but interestingly, that was the day that the tariffs were supposed to go into effect initially, or at least the second. Was the second. That was after they paused them, and yeah, paused them in February. It was supposed to March 4th was supposed to be that day. That was the bottom for butter. The bottom for cheese was March 21st at 160 and a half, $1.60 and a half block cheese price. And now that was, I think, the 24th or 25th of March down at $1.14. All of these prices are trading higher. Now, they're not rip roaring to the upside, but it's telling me that there's some stability around the current levels, maybe even a little bit of strength, probably some good exports on the butter and cheese side, or at least on the cheese side, maybe possibly on the butter side as well. So I look at it and say, boy, when I look around at the S&P 500 or crude oil, some of these bigger markets, or the U.S. dollar, which is just apparently not a safe haven, just getting crushed in the past couple of weeks. And then I look at the ag commodities, and I'm talking about dairy, but I'm also talking about corn and beans, bean oil, go down the line. The ag commodities, they're all basically steady or higher. So, they have their other fundamentals that they have to deal with, but I think we're priced right for a lot of these products, both domestically and globally.
Yeah. Uh, you said nothing's rip roaring higher, but I was just looking at the numbers, and CME spot barrel cheese went from $1.55 on March 21st to $1.80. So we're up 25 cents over the course of 3 weeks, which is pretty surprising, pretty significant as well.
You're right.
Uh,
You're right. I mean, I think I've already gotten into June 1st and beyond FMMO, the new policy. I kind of left barrels out of it, but yeah, the barrel market has certainly ripped higher. Yep, absolutely.
I kind of agree with you that prices are where they ought to be, given how low cheese stocks were in February. The year-over-year decline in cheese stocks during February was a record decline. It's the largest February to February drop that we've ever seen. The model says that CME blocks should have been close to $2 a pound, given how big that decline was, and instead we were averaging what, a dollar 88 in February, and yeah, it was still decent, but it was cheaper than it probably should have been given where the inventory was. And like you said, we dropped going into March, and now we've rebounded. We're at $1.74 for blocks on the spot market today. I think that's a little bit rich given all of the risks, the negative risks around demand and around exports longer term. But um, you know, in all likelihood, inventories are still down year over year, and like you mentioned, I think the exports are really helping to support cheese right now.
Absolutely, and I think the way you described it probably is a very good way of explaining why Class 3 and cheese futures have been under pressure, particularly for May and June, uh, this past week. I mean, we had a 50-cent rally on May Class 3 on Wednesday, and it had almost nothing to do, in my opinion, with the spot market being higher that day or really higher all week. It was after the noon announcement, noon Central Time announcement by the Trump administration that they were going to pause tariffs, and that started the buy side get really aggressive on Class 3 and cheese that day, and we closed the week lower, not making new lows at all, but we basically sold off that rally to end the week, despite the fact that spot continued to push higher again today. So we're over $1.80 on barrels. A very, very skeptical market. The market really just does not want to believe that spot has any kind of sustainability around $1.75, $1.80. Maybe it's right, but if not, we could have a real big slingshot to the upside at some point. I do think exports are good. I don't think we have built up those inventories. Like you said, we're still running lean. I think demand, we saw this happen last year. Demand domestically kind of picked up as well. I don't know. I don't know how this is going to play out, but I do. For whatever reason, the nearby Class 3 and cheese futures definitely feel like a beach ball underwater at the moment. Not that there's like a huge bullish big story out there, but one other thing I would point your attention to is the amount of block cheese that has traded in the last 15 days. So in the last 15 days, we traded over 120 loads of cheese. The spot market sometimes gets a bad rap for being illiquid, and so it only takes money to push the market up, but it actually takes product to push the market down. And so we'll move sometimes 5 or 10 cents on no trades, and the bid just a willing buyer wants to push the market up or can push the market up, and nobody's there to sell it to them, and the price goes up. Well, that's not the case here. I mean, we've traded every day from $1.60 all the way up to, $1.75, $1.76 where we sit today. And it's been 120 loads. If you look at any 15-day period, that average is probably closer to 50 or maybe 60 loads, and we're easily double that right now. So there's been a tremendous amount of product. So anybody who's real bearish and said, "Hey, there's cheese out there, there's fresh cheese," absolutely there is. They're bringing it, and it's getting bought.
Yeah. No, I think that rally, like you, it was a Wednesday, is a good reminder that uh, there are people sitting on the sidelines. There's a lot of uncertainty. People are staying short or shorter than they would usually be in this environment, which is reasonable given all of the uncertainty. But things can jump higher quickly if there's a reason to change that stance. And it is a really good point that the spot market has rallied even in the face of significant volume showing up. And I just don't know what to make between the strength that we're seeing in the spot market and, as you mentioned, the weakness that we're seeing in nearby futures. Because today, spot market was up. We added another 2 cents to barrels, another half a cent to blocks, and the futures class 3 and cheese were down. That futures market, like you said, really doesn't want to believe in this spot strength.
Yeah, and you know what? If we look outside of dairy, though, there are a lot of markets that are dislodged and not doing what you think they would be doing. Um, you know, so look, I mean, look at gold melting. Gold is up 10% this week alone. Uh, you know, and so you look at some of these market moves and they are unnerving. And I think maybe, uh, and I'm not lumping cheese and class 3 into that. I don't think the market moves that are going on in cheese and class 3 are unnerving at all. I think it's relatively orderly, actually. There's a good two-sided trade. There's a live market. There's buyers and sellers. For whatever reason, they're pushing the price down on the futures market. And until full, at some point, perhaps they're going to have to come in and cover those shorts, and we'll see a bit of a rally. That's how I think it'll play out. I'm not sure if that's the case. I don't want to, ignore the willingness of sellers on futures. I get it. But if I look at it, the big broad takeaway from this week and the last week really overall is trust in the markets broadly. And I think that's starting to wear thin. And I think you can see that in discussions or in the rhetoric coming out of the White House. So President Trump is softening some of his language. He's willing to make concessions with some folks. He's not going to come out and surrender and say, I'm, this was a mistake. I didn't think this was going to happen. I didn't think the whole world would blow up. But I think he's gonna dial it back a little bit. And as he does, I think there's going to be some more stability in the outside markets as well. But I mean, at this point, looking at the market reactions here in the U.S. on for example, cheese in class 3, that willing sell side on the futures, it's hard to explain.
Yeah. Well, on that big takeaway, we'll wrap it up. Thanks for your time today, Dave.
As always, thanks, Nate. Appreciate it.
The StoneX Dairy team spans the U.S., EU, Asia, and Oceania, providing market intelligence, analysis, and forecasts through our interactive data platform called StoneX Plus, as well as full-service brokerage on the major dairy exchanges, the CME, EEX, and SGX. If you're interested in finding out more about our market intelligence or brokerage services, you can find more information on stonex.com.
This communication is issued in the European Economic Area by StoneX Financial Europe SA, SFE by the SFE presenters noted. StoneX is the trade name used by StoneX Group Inc. and all its associated entities and subsidiaries. StoneX Group Inc. companies provide financial services worldwide through its subsidiaries, including physical commodities, securities, exchange-traded and over-the-counter, under derivatives, risk management, global payments, and foreign exchange products in accordance with applicable law in the jurisdictions where services are provided. References to certain over-the-counter products or swaps are made on behalf of StoneX Markets, LLC SXM, a member of the National Futures Association NFA and provisionally registered with the U.S. Commodity Futures Trading Commission CFTC as a swap dealer. SXM products are designed only for individuals or firms who qualify under CFTC rules as an eligible contract participant ACPAT and who have been accepted as customers of SXM. Wealth management is offered through SA Stone Wealth Management Inc., member FINRA/SIPC, and SA Stone Investment Advisors Inc., and SEC Registered Investment Advisor, both wholly owned subsidiaries of StoneX Group Inc. StoneX Financial Limited SFL is registered in England and Wales, Company No. 5,616,586. SFL is authorized and regulated by the Financial Conduct Authority registration number FRN 446,717 to provide to professional and eligible customers including arrangement, execution and, where required, clearing derivative transactions in exchange-traded futures and options. SFL is also authorized to engage in the arrangement and execution of transactions in certain OTC products, certain securities trading, precious metals trading and payment services to eligible customers. SFL is authorized regulated by the Financial Conduct Authority under the Payment Services Regulations 2017 for the provision of payment services. SFL is a Category 1 ring dealing member of the London Metal Exchange. In addition, SFL also engages in other physically delivered commodities business and other general business activities which are unregulated and not required to be authorized by the Financial Conduct Authority. StoneX Financial Europe SA, SFE is a securities trading firm registered in the Grand Duchy of Luxembourg under Company No. RC Lux B 10821. SFE is authorized by the Luxembourg Ministry of Finance and regulated by the Commission de Surveillance du Secteur Financier Registration No. P0000012 to carry out, inter alia, the activities of investment advisor, portfolio manager, professional acting on own account, broker in financial instruments, and commission agent. StoneX Financial Pte Ltd Co. Reg. No. 2011305988R SFP is regulated by the Monetary Authority of Singapore and is a capital market service licensee for dealing in capital market products, an exempt financial advisor for advising on investment products and issuing or promulgating analyses/reports on investment products, and a major payment institution for cross-border money transfer service. StoneX Financial HK Limited C. No. BCQ 152 SHK is regulated by the Hong Kong Securities and Futures Commission for dealing in futures contracts. StoneX Group Inc. acts as agent for SFL in New York with respect to its payment services business. StoneX Financial Thai Limited SFA Akin 141774727 holds an Australian financial service license and is regulated by the Australian Securities and Investments Commission AFSL 345646. StoneX Securities Co. Limited SSJ Co. Reg. No. 010401047199 is regulated by the Japanese Financial Sir. ISIS Agency as a Taipei Financial Instruments Business Operator Kanto Local Finance Finance Bureau FIBO No. 291, is a member of the Financial Futures Association of Japan for dealing and broking FX and FX option transactions, and is a member of the Japan Securities Dealers Association for dealing and broking stock indices and option transactions. The information herein is not a recommendation to trade nor investment research or an offer to buy or sell any financial product. It does not take into account your particular investment objectives, financial situation, or needs, and does not create a binding obligation on any of the StoneX Group Inc. of companies to enter into any transaction with you. You are advised to perform an independent investigation of any transaction to determine whether any transaction is suitable for you. This material should be construed as the solicitation of an account, order, and/or services provided by the FCM division of StoneX Financial Inc., SFI NFAID 0476094, or StoneX Markets LLC SXM NFAID 0449652, and represents the opinions and viewpoints of the individual authors or presenters and does not necessarily reflect the viewpoints of SFI or SXM. It does not constitute an individualized recommendation or take into account the particular trading objectives, financial situations, or needs of individual customers. Additionally, this material should not be construed as research material. The trading of derivatives such as futures, options, and over-the-counter OC products or swaps may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and you should fully understand the risks prior to trading. Past results are not necessarily indicative of future results. All references to and discussion of OTC products or swaps are made solely on behalf of SXM. All references to futures and options on futures trading are made solely on behalf of SFI. SXM products are intended to be traded only by individuals or firms who qualify under CFTC rules as an eligible contract participant ECPA and who have been accepted as customers of SXM. SFI and SXM are not responsible for any redistribution of this material by third parties or any trading decisions taken by persons not intended to view this material. Information contained herein was obtained from sources believed to be reliable, but is not guaranteed as to its accuracy. Contact designated personnel from SFI or SXM for specific trading advice to meet your trading preferences. SFP may distribute analysis/report produced by its respective foreign affiliates within the StoneX Group of companies pursuant to an arrangement under Regulation 32C of the Financial Advisors Regulations. Recipients should contact SFP at 656-309-1000 for any matters arising from or in connection with this podcast. No part of this material may be copied or duplicated in any form by any means or redistributed without the prior written consent of StoneX Group Inc. The podcast herein is not directed to or intended for distribution to or use by any person or entity who is a citizen or resident of or located in any locality, state, country, or other jurisdiction where such distribution, publication, availability, or use would be contrary to law or regulation. Copyright 2024 StoneX Group Inc. All rights reserved.